Bitcoin, which we really consider digital gold, kind of fixes all of those problems, right? It's immediately liquid. It's 24 hours a day.
You consider that a hard asset as well?
I've come to the point where I consider Bitcoin to be a hard asset. It's a digital asset, but like I almost view it as a hard asset.
Hard because it's limited.
There's loss, but it's also there's coins that haven't been produced yet. And so like, how do you produce coins? So when Bitcoin is first created, there were no coins out there. There was only ever a cap of 21 million, but there was zero.
Commodity that you literally cannot get more of, right? It's capped at 21 million, and everybody around the world wants it. Sovereign wealth funds wants it. The wealthiest people want it. It's tradable 24 hours a day. You can put it on a flash drive. You can go anywhere in the world, right? You can move it. Try and move.
Exactly, and then it will all go all the way to 2140, and then 21 million Bitcoin is all that's in the world. And so the interesting thing is, what mining is and why there's this kind of physical asset is because in order to produce a Bitcoin
isn't some imaginary, intangible invention. Behind every Bitcoin are massive data centers, high-powered computing rigs, and enormous energy infrastructure. Just as gold requires excavation and refinement, Bitcoin requires real-world energy, hardware investment, and global computing power to bring each coin into existence. That's why he views it as a hard asset, one secured by physics, not by trust in governments or central banks. Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space, and drop your comments and observations in the comment section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks, and enjoy the video.
Bitcoin, which we really consider digital gold, kind of fixes all of those problems, right? It's immediately liquid. It's 24 hours a day.
You consider that a hard asset as well?
I've come to the point where I consider Bitcoin to be a hard asset. It's a digital asset, but like I almost view it as a hard asset.
Hard because it's limited.
And it uses energy to be mined. So you have real data centers that are essentially consuming power from the grid and running compute to securitize a network. So you actually have to spend a ton of money to produce every coin as well. You can't just go and print it because some person decides I want to go print more tokens.
And I think this is the problem with guys my age and people that don't understand. They're like, yeah, but I can't see it and I can't touch it. How's it real?
That was always the problem for all real estate guys, right? But
yeah, exactly.
It's actually more real than anything else because you can listen, Grant. If gold ever went to $20,000 an ounce, you would take down the column right behind me right now.
Yeah.
We would pull gold out of that column, right? Elon Musk would send a spaceship up to Mars, and he would find gold on Mars, and there's always going to be a surplus quantity if that was ever happen, right?
Yeah.
Bitcoin is the only.
You're saying if the price of that went up, we would find gold.
You're always going to explore more, right? As the price goes up,
I agree with that.
You're going to always go deeper into the earth. You're going to go into harder locations. You're always going to explore more.
But gold would be considered a hard asset, right?
Bitcoin is the only commodity that you literally cannot get more of, right? It's capped at 21 million, and everybody around the world wants it. Sovereign wealth funds wants it. The wealthiest people want it. It's tradable 24 hours a day. You can put it on a flash drive. You can go anywhere in the world, right? You can move it. Try and move a couple bricks of gold through Miami Airport. Good luck. They're going to throw you in jail. The IRS is going to come knock on your door and throw you in jail for money laundering, even though it's an asset that you own. It's just, Bitcoin is digital gold. I think it's a better version of gold, and that's why it's become one of the greatest stores of value anywhere in the world.
Go ahead.
I think too is if you think about, for folks trying to conceptualize what is this thing, so I'll tell you a funny story. A couple of years ago when we had our early investors, when we first started a company called US Bitcoin Corp that turned into Hut 8, and we'll talk about how that all connects with American Bitcoin, but he called me one day, like a year and a half after investing, old guy, real estate guy, and literally a year and a half after investing, he calls me. He's like, hey, Asher, quick question. When you guys are mining Bitcoin, are you getting any physical Bitcoin that come out? And I was like, oh boy, you've been
really
investing in this for a year and a half. And I was like, I called him. I was like, because he's like, when I see
he was an investor with you.
Yeah, and he's like, when I see these photos on all these articles, you see these coins.
Yeah, exactly.
Like, is there real coins that come? I'm like, no, it's all digital. And so I think what's good to kind of think through and understand was like, when Bitcoin was created, there were a couple key kind of founding principles. One is, there's no centralized authority that governs how it works. There's the rules that are transcribed, like the 12 commandments.
Yeah.
And so.
Where are you from? What's your nationality?
Half Israeli, half Chinese. So I got a little bit of a mix. And so, so there are the rules that
means he's very intelligent.
Very intelligent. Very intelligent.
So there are the rules that are transcribed, and essentially what the rules are with this. There are only 21 million coins ever produced. And it's a deflation asset rather than an inflation asset.
Deflation asset.
Yeah, so what I mean by that is, how do those 21 million coins come into the world? Today, there are not 21 million coins out there.
Right.
There's less. And so
probably 4 or 5 million lost because
there's loss, but it's also there's coins that haven't been produced yet. And so like, how do you produce coins? So when Bitcoin was first created, there were no coins out there. There was only ever a cap of 21 million, but there were 0. And then so they had this thing called mining, and what mining was essentially you get a bunch of computers and you securitize the network. And so what does that mean is right now there's millions and millions of computers around the world. And what they do is if you transfer Bitcoin to Eric, all of those computers have to agree that that happened. And then they go on to the next transaction.
Now, how did they agree it happened? I'm going to send him something to his.
So basically,
to his wallet.
Yes.
His electronic wallet that's not a real wallet.
Correct. So there's two things. There's how do you confirm that specific transaction, then how do you confirm the historical transactions? So one is how do you confirm that specific transaction? If you transfer to his wallet, you basically are sending the coins to his wallet, and then it's getting inked into the ledger. So that's why kind of it's not your keys, not your wallet is the whole thing, which is like you have to control where your Bitcoin is and how it's transferred. But the other key thing is who stops the network from going back and saying, you know what, 5 transactions ago, you actually didn't send a Bitcoin to Eric, you sent it to me. How do you prevent that from happening? And so that's what all these computers do. They say, we are verifying.
These are individual, independent computers.
Around the whole
These
world.
People don't even know one another.
Correct, around the whole world.
This is an Ethernet kind of.
That's right.
That's right. That's
not
right.
agreed upon, but agreed upon.
But agreed upon, because everyone's saying, you know what? Over the last series of thousands or millions of transactions, this is what the trail of transactions are.
Yeah.
So no one can come in and go change history because it's locked in. And so if you think about that overall scale of the network of computers today, the amount of energy consumed to actually run the network is more than some small country.
Eric and Asher then explain how American Bitcoin Corporation, ABTC, emerged from the data center expertise of Hut 8. Hut 8 now focuses on AI-driven data centers, while ABTC became a pure-play Bitcoin mining company. They mine roughly 10 Bitcoin per day, at nearly half the market cost, while holding every coin rather than selling. This strategy allows them to accumulate Bitcoin at a lower average price than any retail investor could, creating long-term shareholder value through disciplined accumulation and infrastructure advantage.
Yeah, you're talking about energy now, you're talking about electricity.
The electricity that goes into the data centers to run the computers, right? And so why I called it a deflation asset rather than inflation is every 4 years, there's a thing called the halving, which is right now about 450 Bitcoin get produced every single day.
Every day.
Every day.
Okay.
Right? And then at the halving, that's going to drop down to 225. It was at 900 before.
Yeah, and then it'll go 115 or 130.
Exactly, and it keeps on dropping and dropping.
60 until it's finally a half.
Exactly, and then it will all go all the way to 2140, and then 21 million Bitcoin is all that's in the world. And so the interesting thing is, what mining is and why there's this kind of physical asset is because in order to produce a Bitcoin, you need these computers to actually verify the network. In order to have these computers, you have to build large data centers. In order to power the data center and the computers, you need large access to energy. And so without all of this infrastructure...
But all this was built without data centers. Up to now,
no, we
don't have centralized data centers.
We have like American Bitcoin. We have massive data centers in the U.S. that run this compute. We'll send you some of these photos, but I mean, we have.
Maybe I should be investing in the data centers right now.
ABTC owns them.
Oh, okay.
So ABTC mines Bitcoin as well.
Okay.
And ABTC, like one of our facilities, it's 5 football fields long. That's the building.
Where's it located?
Amarillo, Texas.
Okay, I know Amarillo.
And so
because that's the cheapest energy.
Yeah.
All the computers are liquid cooled. I mean, these are the most efficient computers anywhere in the world.
These are basically empty storage
and so think about it. Those are the facilities that are located all around the world that are guarding, your asset, right? And that's the Bitcoin. So let's just say something tragically happened at one of the facilities. Guess what? The redundancy of the entire network would spread it out, where all the other networks would guard your asset, and that's why people love it. But again, it's capped at that 21 million, and so.
But just help me out here. The first guys that started doing this Bitcoin thing, they didn't have data centers.
They had computers.
They had computers.
They had a computer, which was a data center.
Correct. So what happened was, so if you think about,
and they're sitting there doing what? They're putting code in.
They have this code called SHA-256, which is the encryption algorithm, and so instead of.
And they're doing this for what? I'm sorry. I'm so ignorant about this, but I think there's a lot of people out there like me.
Yeah. So if you think about the evolution, and this is the evolution of chips, right? So essentially, before, everyone was doing the same thing, but instead of data centers, everyone was doing it out of their computers. So you can mine Bitcoin from your computers. Then people said, you know what? Is there a better form of computer that can run this algorithm faster? So they actually then went to GPUs. GPUs are what run AI today. And so then, like one of our co-founders, Mike, he started mining way back. He went to every single Best Buy, bought all of the gaming GPUs he could, and that's how he started mining Bitcoin back in 2013, 14.
And he's mining the Bitcoin because he gets...
Because those computers are running the encryption
But he gets
algorithm.
what? He gets rewarded?
He gets rewarded Bitcoin for driving that compute. So if the way you think about how mining makes money is, every day there's only 450 Bitcoin released into the world. How that's released is based on who is contributing the compute into the network. So let's just say, make it easy, if 1 unit of computer equated to 1 unit of compute, then you say, all right, there's 450 computers, there's 450 Bitcoin, that means everyone gets 1 Bitcoin. If now you have 900 computers and 450 Bitcoin, everyone gets half a Bitcoin. And so the more efficient your computer is, the more Bitcoin that you get. And so that's why you went from kind of people doing CPU computers
to it being
to
organized.
GPUs.
Right.
And then now they have these ASICs, which are these single-purpose computers that can do nothing but SHA-256 for Bitcoin. And so it's very specialized, but it can
All
do
they're doing 24/7 is what?
SHA-256 verifying the Bitcoin network. That's it.
Verifying.
The computers are incapable of doing anything else.
Okay.
They can only do SHA-256.
Okay, so how do you guys come up with American Bitcoin? ABTC is the stock. It's trading for $7, $6. What's it trading for today?
Somewhere between $5, $6, yeah.
Yeah. Okay.
So I wanted to do a data center play, and we had a company called American Data Centers. So met Asher, we became best friends almost instantly. And Hut 8, which is our sister company, and it's something that Asher runs every day. They're incredible at the data center game. In fact, this guy's stock, I mean, I can't. He's gonna blush because he's too humble. But
what's Hut 8 trading at?
I think we're at
40.
50 something, 40, 50
And you
something.
opened at what?
Yeah. So when I took over, we were at like $6.77.
Oh, so 10x.
This is about 18 months ago. So Asher's got some of the best performance.
I like 10x people.
He's doing unbelievable. But he's like, we both had the love for Bitcoin, and it's like, why don't we take this infrastructure that we have for Hut 8, and why don't we go down the Bitcoin route? We can mine Bitcoin more efficiently than anybody in the world. We have some of the cheapest energy anywhere in the world, right, in West Texas. Every day we're mining Bitcoin.
At Hut 8?
No, at ABTC.
At ABTC.
So the way to think about this is this.
So it was sitting there. ABTC sitting.
No, so the way to think about their origin story was this. Hut 8 has been around since 2017.
Okay.
Okay, and Hut 8 was actually one of the first public companies in the world to hold Bitcoin on the balance sheet. And so Hut 8 was a business that had Bitcoin on the balance sheet, it had this mining business, and it had this data center business. And obviously the data centers consume a lot of energy. Backtrack about a year and a half ago, we started getting all these investors that bought our public stock and said, hey, we think there's this massive AI wave. You guys need to build data centers for AI as well, not just for Bitcoin. And so we started having this conflict of, we have a group of shareholders that just want us to do data centers, AI, energy. And then we have a group of shareholders that have been with us forever that just believe in Bitcoin, right? And said, okay, long term, these are two different types
And they're
of
giving you input how?
They're public shareholders in our public company, right? And so they're giving input on like, hey, why don't you guys spend less money on Bitcoin, more money on data centers, et cetera. And so we said, naturally, like, owning Bitcoin is a much more volatile asset than owning infrastructure, data centers, power. And we said, all right, the cost of capital is different because when you have more volatility, your cost of capital is higher, but you can make more money. And then when you do real estate, your cost of capital is lower, and so you can kind of invest for longer returns, right? And so basically, when we started getting together, Eric was starting American Data Centers, and he was like, hey, what are you guys doing? I was like, look, we have this data center business we're building. Like, when we started talking about Bitcoin, we started talking about like infrastructure and real estate, and I think he shared with you.
This is outside of Hut 8.
This is outside of Hut 8.
Got it.
We started talking about these ideas,
Got it.
and I was like, I think there's a world where we want to spin out the computers and create a company that's solely Bitcoin. Hut 8 just becomes the infrastructure company, and American Bitcoin can be this pure play Bitcoin company that mines Bitcoin. Because they're sister companies, the economics are vertically integrated. And so then the basic idea.
So there's a contract, there's an agreement between ABTC and Hut 8.
Yeah, and think about it on the real estate side, you have the management business and the real estate business. It's like that same idea.
I get it.
Yeah, exactly. And so that will form ABTC.
Yeah, so ABTC's, their job today is what? What do they do in every
We're mining Bitcoin every single day. Right, so every single day we're mining Bitcoin for roughly 50% of what Bitcoin trades at right now. So Bitcoin's at about 110,000.
Yeah.
And we're mining every single day. We're mining a lot of Bitcoin for roughly 50%. I mean, right now we're about 2.5% of the world's total mining based on
Mining
exahash.
a little over 10 Bitcoin a day.
So I'll probably have some of your Bitcoin.
You definitely have some of our Bitcoin. As an investor, you definitely have some of
But
our.
I'm paying double.
But it allows us to do two things, Grant.
But we also don't sell the Bitcoin. So the Bitcoin we mine, we hold it all. And we just grow and
so
grow.
I don't
You own it as a shareholder. You're not buying it in the
but
market.
I don't have any of your Bitcoin.
Correct.
You don't sell.
Because we're holding it.
So how much? Can you tell me what you have now?
The beautiful part about this model is, on one sense, we're mining Bitcoin every single day, 365 days a year. We're mining Bitcoin, and we're doing so at, again, roughly 50 cent dollars, right? At the same time, we're going out there and we're acquiring Bitcoin, right? And so we believe in the asset. This is, again, the asset that's grown 70% a year over year. I don't need to convince you of Bitcoin. You're clearly a believer. But what it allows us to do, unlike every other strategy company, it allows us to dollar cost average down the Bitcoin. So everybody, if they're going out and buying Bitcoin, they have to buy at fair market value, because guess what? That's what you're buying on the street. We might have to buy this at fair market value if we go out and purchase. But then every single day, the Bitcoin that we're mining for 50 cent dollars is actually pulling down, and dollar cost averaging down our Bitcoin holdings. And that's how we can accrete value to shareholders.
Bitcoin isn't just another asset. As Eric Trump and Asher Genoot make clear, it's a global, energy-backed, mathematically enforced store of value, a harder form of money than anything that came before it. From massive data centers to the halving cycle to the 21 million hard cap, Bitcoin represents a new era of digital scarcity and financial independence. Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space, and drop your comments and observations in the comment section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks, and enjoy the video.